Welcome to The Explainer. Today we're breaking down Tony Robbins' absolute best wealth building strategies. We're talking simple, actionable steps to financial freedom right out of his book, Money Master the Game. It's honestly time to rethink everything you thought you knew about wealth. So let's jump right in. $1 million. You know, if I asked you what the absolute perfect amount of money is to make, 9 out of 10 of you would probably say that exact figure.
But really, why $1 million? We're drawn to this figure like flies to a light. But the truth is, it's totally arbitrary. It's just a financial myth. And today, we're going to bust it.
Lesson 1. The power of compounding.
Okay, let's take a breath. We're going to slow things way down. I want to tell you a story about the exponential power of compounding interest. This concept is massive. It's honestly kind of hard for the human mind to fully grasp. So when Benjamin Franklin died back in 1790, he left $1,000 to both Boston and Philadelphia. But there was a really strict rule attached. They had to invest it. They couldn't touch a single dime for 1 full century. After 100 years, they were allowed to withdraw a portion, but they had to let the rest sit for another 100 years.
The results of this are absolutely astonishing. After 200 years of compounding, Philadelphia ended up with $2 million. Boston did even better. Boston turned that initial $1,000 gift into a glorious $4.5 million from just $1,000. That is the sheer magic of time. Never, ever underestimate the absolute power of compounding interest.
Lesson 2. Finding your real number. Okay, let's dive into this. We really need to replace that $1 million myth with a much more accessible truth.
$51,000. Just let that math sink in for a minute.
Why is that specific number so important? Well, because it's the average annual spending of an American adult. Think about it. If you can passively make $51,000 a year from your investments, you literally never have to work again. That is all it actually takes to be free. $1 million is roughly 20 times as much as you actually need. Doesn't that just instantly make you feel more at ease? The pressure of hitting some massive, arbitrary number is gone. You really just need enough to cover your actual life. $640,000. This right here is your actual target. This is the total amount you need to have saved and invested. This specific pile of money is exactly how you reach that yearly goal of $51,000. It's a very specific, totally achievable mathematical target.
Here's exactly how the math plays out. If you have $640,000 invested, and you get an 8% annual return on that money, it yields $51,000 per year, every single year. And hey, an 8% return is completely realistic. It's actually just slightly above the historical average return of the stock market. You really don't need to be a financial genius to hit this. You just need consistency and time.
Setting specific milestones really helps you stay realistic. Tony Robbins suggests picking one of 3 specific goals to start. Goal 1 is your basic needs. This covers your baseline living costs, things like rent, food, and utilities. Goal 2 is needs plus fun. This pays for your basic costs, plus extra things like travel and entertainment. Goal 3 is total financial independence. You no longer work for money. Your money works entirely for you. Financial freedom isn't some pipe dream. It's really just a step-by-step mathematical formula.
Lesson 3. The 3-bucket system.
So how do we actually reach those goals we just talked about? Well, it's time for Tony's strategy for diversifying your investments. And it all starts with a very simple rule. Allocate 10% of your income into 3 specific buckets. Now, why 10%? Because investing just 10% of your income is a fantastic, manageable starting point. It's going to get you quite far, quite fast. And most importantly, it won't completely wreck your daily spending habits. Most of us can pretty easily adapt to living on 90% of what we make.
Now, what's really interesting about this is how these buckets are designed to perfectly balance risk and reward. First up is the security bucket. This holds safe investments, like government bonds. You won't get huge returns here, but you're very unlikely to lose your money. Next is the growth bucket. This one's for riskier investments, like company stocks. Sure, they can be volatile and go up and down, but they often beat average returns in the long run. And finally, we have the dream bucket.
The dream bucket is unique. It's actually funded by the profits from your other 2 buckets. For example, you might take 10% of your portfolio profits and move them here at the end of every year. Honestly, this is the most important part of the whole strategy. Making money is only meaningful if you actually use it to live your life. You have to use a dream bucket to pay for the life you truly want.
Maybe that's a vacation home. Maybe it's starting a charity. Without a dream bucket, what good are the other two? The money needs a real purpose.
And this brilliantly illustrates the ultimate point of wealth building. It's not about just hoarding cash to reach some meaningless million-dollar mark. That's an illusion. It's about taking logical, calm steps to fund your specific ideal lifestyle. You now have the math. You understand the shift from an arbitrary million to a concrete 640,000, and you've got the bucket system. So I'll leave you with this final thought. What does your dream bucket look like?